Opendoor stock enters Wednesday's pre-market session in a fascinating position. After an incredible rally over the past week, capped off by a close at $5.09 on Monday, the stock has now pulled back slightly but remains comfortably in its new trading range. What's especially interesting here is that we're beginning to see both technical indicators and strategic narratives converge, and together they create the foundation for what could be the next chapter in this Opendoor story. On the technical side, the stock has just triggered a golden cross. For those who don't follow chart patterns, that's when a shorter-term moving average, typically the 50-day, crosses above a longer-term moving average like the 200-day. It's widely seen as one of the most reliable bullish signals in trading, often foreshadowing further upside momentum. Combine that with the fact that Opendoor has been one of the most talked-about tickers online, and you have a recipe for a stock that is attracting not just retail buzz but also technical traders who may be jumping on board simply because of what the chart is telling them. But this story goes beyond candles and moving averages. What makes Opendoor so compelling right now is that there's a deeper narrative unfolding. On the corporate side, the company is still in the middle of a CEO transition. Interim Chief Executive Shrisha Radhakrishna has stepped into the role following Carrie Wheeler's sudden departure, and the search for a permanent CEO is still ongoing. For many investors, both retail and institutional, that leadership decision is going to be pivotal. The next CEO will set the tone for how the company navigates its next phase. Will Opendoor double down on its original capital-intensive iBuying model, or will it accelerate its pivot toward an asset-light marketplace powered by AI and technology? So far, Shrisha has played his cards well. He's leaned into the retail movement in a way few executives ever do, engaging directly with shareholders on X and even buying stock himself to show conviction. That insider buy, while small in absolute dollar terms, was symbolically powerful. It told the retail base, "I'm not just talking the talk, I'm walking it too." He's also been transparent about cost controls, AI initiatives like Repair Copilot and Risk AI, and the quiet but important effort of building leaner, more scalable operational infrastructure. This balance of listening to retail while maintaining the responsibilities of a corporate leader has, at least so far, bought him credibility. Meanwhile, retail investors, the so-called open army, aren't just sitting idle. They're continuing to act like a decentralized hedge fund. From submitting formal letters to the board packed with ideas on strategy, to offering feedback on products, to pressuring for leadership accountability, retail is shaping the conversation in real time. And the board can't ignore it anymore. The days of chalking this up to meme stock noise are over. Opendoor is now a case study in what happens when retail sentiment intersects with tangible insider activity and founder pressure. And founder pressure is indeed part of this. Keith Rabois, one of the original architects of Opendoor's vision, has been posting cryptic but clearly critical comments online about the board and its reliance on consultants. Whether or not he intends to re-engage directly with the company, his voice matters. He's respected in Silicon Valley, he has credibility in scaling disruptive businesses, and his presence validates the frustrations retail investors have voiced for months. If the board were to bring him back in some capacity, even just symbolically, it could provide an immediate jolt of confidence to both the market and the retail base. So what does all this mean for Wednesday's trade? It means that we're heading into the session with two powerful forces at play, a technical setup and a strategic crossroads. On the technical side, the golden cross gives traders a reason to buy. On the strategic side, the unresolved CEO search, Shrisha's growing rapport with retail, and the possibility of founder involvement create anticipation. This anticipation is almost as powerful as actual news, because markets often move on expectations rather than just outcomes. The $5 level is going to be critical. On Monday, the stock tested it, briefly pushed above to $5.19, and closed at $5.09. That makes $5 both a psychological level and a technical one. If Opendoor can hold above it consistently, it confirms strength and opens the door to $6 or even $7 in the near term. If it falls below, the next key support to watch is around $4.50. Either way, volatility is to be expected, and in this case, volatility isn't necessarily a bad thing. It means liquidity, it means interest, and it means energy in the stock. Investors should also be watching for updates out of San Francisco. Eric Jackson, the retail champion who spent 13 days outside Drake's mansion, has now traveled west and hinted at meetings with Opendoor board members. If he emerges with even a symbolic win, say, a photo with Shrisha or confirmation of direct dialogue, it will be a powerful narrative moment. Symbolism matters in markets, and retail thrives on these storylines. It's also worth mentioning the macro backdrop. While interest rates remain elevated, The Federal Reserve has signaled that cuts could be coming as soon as September. That's still a few weeks away, but markets are forward-looking. For Opendoor, which depends heavily on transaction volume in the housing market, lower rates could be transformative. More buyers, more sellers, and more activity flowing through the platform could be the operational spark that pairs perfectly with the strategic pivot to asset-light, AI-driven growth. So here's the bigger picture. Opendoor is no longer a stock simply moving on meme-like energy. It's evolving into a narrative stock with multiple layers: retail activism, insider alignment, founder validation, strategic crossroads, and now bullish technicals. Each of these alone can drive interest. Together, they create a feedback loop that keeps the stock in focus, keeps it trending, and keeps investors engaged. As we head into Wednesday's trade, the questions aren't just about price action. They're about whether retail can maintain momentum without constant news. They're about whether Shrisha can continue balancing transparency with corporate responsibility. They're about whether the board will act decisively on leadership. And they're about whether technical traders will now join the retail base in pushing this stock higher thanks to the Golden Cross. The takeaway? Patience and perspective are key. Volatility will continue, but so will the narratives. And in this market, narratives are power. Opendoor has proven that it can defy broader market weakness, rally when others falter, and capture the imagination of a global retail base. Whether it's through technical setups like the Golden Cross, insider conviction from Shrisha, or ongoing pressure from figures like Rabois, the ingredients for continued upside are firmly in place. So as the bell approaches, watch the $5 line, listen for updates out of San Francisco, and pay close attention to the tone of retail chatter online. Because when you put it all together, Wednesday could be less about whether Opendoor goes up or down in a single session and more about whether this movement is cementing itself as a longer-term force in the market.